This is Alan Bush with ADMIS. In the stock index futures, we saw some very strong gains yesterday. This after the release of the minutes of the most recent Fed meeting, showing a rather dovish statement. This in fact surprised many traders. So stock index futures were able to rally very substantially. Some of the gains, though, given back today. It looks like some profit taking coming in. Still have these geopolitical risks that remain as a negative. Still feeling, though, that longer term, the low interest rate environment will dominate to take the S&P and the Dow higher. Over in the currencies, still feeling that interest rate differentials are now turning just neutral for the US dollar after they had been very bullish for the greenback for quite some time. So we are now just neutral on the dollar with what we're seeing a little pressure coming into the euro currency. This after German exports showing a rather sizable decline, in fact the largest decline in over 5 years. Also, we had the Bank of England leaving their policies unchanged, with their benchmark interest rate remaining at a record low 50 basis points. Over in the credit markets, very good gains yesterday, some follow-through strength as well today. All of this linked to the minutes of the Fed's most recent policy meeting. The Fed indicated that dollar strength could do some damage as far as the U.S. export business is concerned. Also some concern that the slower growth overseas could limit growth here in the U.S. So those are some of the reasons for the dovish comments in that statement, which very quickly transpired into good gains in treasuries across the board. We continue to feel that the main trend is higher now for the entire interest rate market complex, with most of the gains most likely to be concentrated in the 30-year bond. So the bull market, I believe, is intact. Look for more of the same, higher prices in treasuries. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.